Welcome to Markets Now. I'm Michelle Rook along with Ken Beadle with Paradigm Futures. Well, livestock are sitting back this morning. Grains, at least the row crop sectors to the plus side, were mixed in the wheat market. And Kent, let's talk about row crops because corn and soybeans sat back yesterday. It looked like some profit taking here with those better than expected crop ratings, but we're back up this morning. So is the market looking ahead here at the continued hot, dry forecast or what?
Well, it certainly should be. We do not see much rain in this forecast. If there was a change yesterday, some of the models brought in a chance of some rain in that 7 to 10 day time period for parts of Minnesota, parts of Iowa, but the amounts still look to be very small, below normal precip just generally, and of course, much warmer temperatures again as we get into the Labor Day weekend. We've already begin a process to turn these crops closer to maturation with the heat that we had last week. We're seeing lots of evidence of ears starting to drop, of pod abortion in soybeans. It's just not good for us to have those kinds of temperatures without the soil moisture that we would like to have. And while we did have some, decent rains in early August, and while I think that brought an awful lot of optimism for yields, it's going backwards, and we're now looking at the first half of September is probably not being beneficial either. And so, we just have to question, where is this ultimate yield going to be? And that's what the market's trying to assess right now. And of course, there's some, there are folks who think that maybe the number was a little bit higher that we're subtracting from. And so you still have some higher estimates out there. And, we're just trying to assess that, as well as what acreage might do on the crop reports, where the FSA data suggests that maybe we might have a few more acres.
Yeah, a few more corn acres, no adjustments on beans. So how many more corn acres, and what would that mean to balance sheets?
Well, if that number is 1 million, obviously then you're talking about 100 and, additional 170 million bushels plus or minus. Now, you've got to keep in mind that the yield estimates are, we're thinking could be down, 2 or 3 bushels an acre at a minimum.
Sure.
And, it sort of provides a bit of an offset. So you're still likely looking at a carryout that's above 2 billion bushels on this upcoming report. And right now, people seem to think that, well, if we have 2 billion bushels, we certainly have enough corn. I don't think that's an incorrect view. 2 billion bushels is enough corn, but I do think that we have to look at the demand side of the balance sheet, because there is margin in ethanol. There is margin in livestock production. And we have gotten ourselves somewhat competitive in the world export markets, despite that large safrinha crop in South America. And, day by day, we're seeing evidence that we're starting to pick our export markets up a little bit. They're not as good as we'd like them to be, but they're certainly getting better.
Yeah. But what you said about acreage and demand on corn is really why we have been unable to get above the $5 mark. And when we do, we either see farmers selling or some profit taking.
Yeah, I think so. And, to be fair, the crop conditions are not universally poor. And there are growers that we saw on the tour last week that had, good potential yields. And, while they may have a decent part of the crop marketed, when the market gives them an opportunity to get a little bit more sold at a level north of $5, you're starting to see some of those growers take advantage of that.
Yeah. So $14, we got above that in the November beans with some help from, obviously, these lower estimates in terms of production out of the Pro Farmer Crop Tour. But now, again, we're back to hot, dry weather. What do you think is the sense of the market here in terms of, is $14 fair market value? Is that where we should be with the ending stocks that you think we're calculating out to have?
Yeah, well, a couple things there. First of all, $14 is probably where we're going to need to be if we do see yield reductions on this upcoming report. And, because we're not going to be able to to have an export program as large as the one that we had last year. Now, if you look at the balance sheet, you see that our export program is forecast to be lower, but not dramatically lower.
No.
Okay. On the other hand, you have a much larger South American crop. And so we do have the ability to have the South Americans step in and take a little bit of that 1950 USDA estimate. So we may not need to get, sharply above $14, but the question becomes, what yield do you want to put in here? If we lose a bushel per acre, and we're talking about dropping another, 70, 80 million bushels off of ending stocks, you go from 240 down to, 160 or thereabouts, you're going to have to see that export number drop further. Yeah. And the question is, how much further can it drop, and how much is yield going to drop? Because this has not been a weather pattern here the last half of August that's good for soybean yields.
But at least encouraging at these price levels to see that, we continue to have some flash sales again, like this morning. So hopefully we're, like I said, that's why I asked you for it, fair market value here. Okay, let me move over to the wheat market. I believe we had contract lows in Chicago wheat yesterday. We're trying to bounce a little bit, but mixed in the wheat complex on some spread activity here this morning, or did we just get overdone to the downside yesterday, or what?
Well, a couple of things. First of all, soft red winter is finally pushing itself down into a window that looks like it may be competitive against Russian exports, for example. And so you may not need to move Chicago wheat much lower. On the flip side, we continue to hear better than anticipated yields up in spring wheat areas up in northwest Minnesota and North Dakota. And despite the fact that USDA crop condition ratings have been falling, the yield increases over expectations have been pretty doggone good in spring wheat. And so those balance sheets look to me as though they're going to be a little bit looser than we thought that they might be. Now, keep in mind, yesterday we did hear that the Canadian crop was in fact quite a bit lower, but yet the markets reversed down anyway.
Right.
And so I think that you have the Minneapolis spring wheat kind of being able to maybe fill in some gaps in the Canadian crop. And you also have a large speculator who's short and seems that he wants to press this market to see if he can't get some sort of a technical washout. And we've been moving toward that here these last few days.
Yeah, no doubt. I was going to ask you how much farther the specs wanted to push this thing on the short side, but obviously you just answered that. Cattle market, what about that market? Feeders hit some new contract highs 2 days ago, and then we were kind of looking like we're in consolidation mode the last 2 days here. So is this just profit taking, waiting for cash direction, or, the boxes have started to cool off here a little bit. So maybe is that part of it as well?
Yeah, well, we've obviously, not doing great in cash markets right now. We've got some seasonality issues. We also have a large speculator that's got, a fairly large long position. And while they've been starting to liquidate that out, I think that they're still in the mode here of taking rallies like we had earlier this week and wanting to sell those rallies to continue to pare that position back due to the seasonal nature of the cattle market. Our belief is that, we could pull back and maybe even, see kind of a washout where we, take, 20 or 30 or 40,000 of these long contracts and blow them out of the market. And then we would likely be in an area of value that end users and commercials would probably step in, because the longer term fundamental outlook for cattle still looks pretty good. And we are kind of anticipating that that new highs are still probably going to be ahead of this market in the fourth quarter.
Yeah, absolutely. But the hog market down again today. There we have a different situation. The upfront supplies are actually a little burdensome here for this market, and seasonally we're also seeing pressure, right?
Yeah, we tend to peak out cash markets in the summer in hogs, obviously, and we were wondering when we were ever going to get that rally. We finally did get it. It took us actually higher than many thought that we were going to be able to get, but it's now left us in a position where, the CME index is trading well above the futures, and that index is now starting to come down seasonally. We think that there's a lot of supply. We actually think that we're going to see lower hog prices and maybe surprisingly lower hog prices with the supplies that we have. But we have some of these days where a market feels like it's getting ahead of itself, and so you end up with a fairly sharp short covering rally. And we had that here a couple of days ago.
All right. Thanks for joining us, Kent Beadle with Paradigm Futures. That is Markets Now.